Hello, my dear.
Hello.
For those of you watching, I told you we're bringing you Facebook learning guides, and we're going to be featuring a lot of the specialty of the people that are out there in our Facebook world. They have so much to bring to the table. Darrell Hickerson, he is one of our male allies, or he likes to say he is the man, and he is the main man in our home here. And actually, Darrell is specializes in debt. And I have to be first off and say this because I did not know how much was involved in debt until Darrell started going down this path. He left his medical practice October 2019, really wanted to be focused on how do we get more people in a position. At that time, it was just he didn't understand how come people weren't able to pay for healing care, which he was providing at the time. And once he went down the debt, the little debt rabbit hole, and found that there's a lot of different programs of things that I didn't certainly know was available. And it's really become the main focus. And he's really the expert in the space now. And it's been kind of fun as your spouse too, not just your business partner, but to sit back and watch you, Darrell. Somebody will say something about debt in your ears. I'll see you lean over and you're like, well, actually, and you start to do that. Talk a little bit about some of the work what do you enjoy about the work that you're doing in debt restructure?
I like that I still get to help people like I did in the medical industry. It's rewarding to be able to get somebody out of debt quickly and actually see it happen. I also sell life insurance, and to me that wasn't quite as rewarding because a bad thing has to happen for somebody to get a benefit. So when you get somebody out of debt, they immediately are able to do something else and invest it or save money or buy the house they always wanted. So that's what I like about it.
Yeah. And I have to tell you, that is the one thing I can say that behind the scenes, for those who see us a lot of times as the face at Females of Finance, or, some of the things we're doing out there, but you really do. You're like, I really help that person. And I believe that you are. One of the things I want to say transparently, debt restructure doesn't mean people are just off. They're getting off the thing where they don't have to pay anything back. And it's not like that. We're going to talk a little bit that today in this guide so that Darrell can actually explain some of it. So what we're going to do is start this off with question number one, which is, what are some of the leading causes of debt with consumers today, so that people can understand just how profound of a problem this truly is?
The leading one is student loans right now, private and federal. The federal student loans are on forbearance right now, but the private student loans are still earning interest. So it's over $1 trillion in student debt. Another big one is medical debt with COVID-19 happening. A lot of people lost their jobs. They weren't able to afford medical care. So they've had to they haven't been able to pay for the medical care they did receive. And some insurances did not cover COVID-19 because it wasn't listed as a diagnosis, but they did cover some of the other diagnoses that happened with the COVID-19 patients. So those are two of the big ones. But along with the COVID, I noticed when it started last year, I took my son to a birthday party and nobody would take cash. They would only take credit cards. So that's another thing that happened. A lot of unsecured debt, people paying with credit cards, and a lot of people lost their jobs and they didn't have the cash on hand, so they had to pay with credit cards also. So credit cards is another huge debt that happened because it wasn't just because of COVID, but it made it worse because of COVID.
And I think too, one of the things that you and I spoke about is people had a lot of homes that, there's only a certain amount of time you can put a home into forbearance or a car into forbearance, the notes on them. And so I think that's another one too, is you still owe that money. They can back end it onto the loan, but you still have to pay it off. And I think that we're going to see not just the debt spiral right now, but I think we're going to see a lot more of that as those forbearances come due. Right. And be like, what do you mean I got to write a check for $9.5 grand? Yeah, you still got to pay that stuff off. So these are things that I learned listening to you, talking to clients, and some of the advisors and such that you've been, working with. The second question I wanted to also make sure you spend some time on is how exactly does debt restructuring work and the different programs that are available? Because again, going back to our original point at the beginning of this guide was this isn't just people are all, they're not getting a program where you don't have, scot free, or you don't have to pay. You still have to pay. But I'd love for you to talk about how the restructure works and some of the programs that you have specifically available.
Yep. So history has that people usually have a settlement program or they consolidate their loans into something else. I like our company better than that. What the programs we have validation program, assumption program, settlement program, and an arbitration program. So depending on what kind of debt you have, kind of depends on what program you fit under. The validation program is a program where we work with lawyers and they find out if your debt's valid or invalid. If it's found to be valid, your debt's wiped away and all the negative reporting on your credit scores are wiped away also. So the other program is assumption, and the bank assumes the loan with the client to pay off. And what they end up doing is a short version of it is negotiating terms with the creditors. The settlement program is similar to that, but the client pays into an escrow account, and when they have so much into the escrow account, then the accountants and lawyers negotiate terms with the creditors. The arbitration program is a third party, and the arbitration program is nice because sometimes you can get your loans paid off faster. But if you have it will take a larger chunk of money to be able to do that. So the arbitration program is a third party program. They negotiate terms between the creditor and the client, and they agree on the terms what they're going to pay with all the different debts that client has. So depending on the debt, it's usually 90 days that they can have it arbitrated. So if you need to get a house soon, or you're looking to buy a house soon, but your credit score's bad or you have too much debt, this is a good option to be able to buy a house sooner. The other programs are 2 to 4 years. All of them are 0% interest. So there's no interest being built up when you enroll in the program.
And these programs, they cover, let me shout out some things that people might not know, or they do, or questioning. So somebody has a mortgage and has a house note. Do you have a program to help with that?
If they have been evicted from the house, yes. If they are still living in the house, no. Same thing with the car. If they still own the car, we can't help with that. But if their car has been repossessed, then there is a program for that. So same thing with vacation timeshares.
I didn't even think about that.
Yep, vacation timeshares. If you no longer own the timeshare, but you still owe the money for it, there's a program to help with that too.
And then how about, you talked about student loans. So there's federal student loans, private student loans. What about those?
So the private student loans and credit cards, medical debt, it's kind of all together. They can be put into the same program. The federal student loans are a little different. We have a different program for that. And what we do is we can check to see if they can be consolidated into another loan, or if they can be put into a different program. For like teachers and public servants. There's the forgiveness programs for that, depending on their history and things like that.
Here's a question I've never asked you. What about people who take out private loans in general? Just they needed now they're having a deck built and they have to take out a note. That's an inside joke. We're having a deck built, so it was easy to for those watching why we're smiling. But the deck although we paid cash for it, if we took a note out for it, would that be something you could work with?
Yes. Private student loans
I did
can
not
be.
know that.
Business loans we cannot work with if they are in the
Okay.
business number. But if
Okay.
they took out a business loan in their own social security number, we can help with that.
What's the minimum maximum? I'm sure there's got to be a minimum amount of debt for this to work, or a maximum amount that they can't do.
So with the validation program, there's no minimum really, but they don't recommend anything under $8,000.
Okay.
If it's under $8,000, you might as well just figure out how you're going to pay your debt off.
That's when all our financial coaches and budget people in the group need to step in.
Yeah.
Agree.
So if it's over $8,000, they can help. If the assumption programs, it has to be over $15,000. Settlement programs over $8,000 also.
Okay.
There's no minimum for the arbitration program. There's no maximum for arbitration, validation, or settlement. There is it was $250,000 for assumption, but I think they just recently raised it to $450,000.
Okay. That's amazing. All right. And how about this? The last question I had for you is, why should financial service professionals have access to someone who restructures debt like you for their clients? Because one of the things that I have heard with financial advisors specifically are like, if they come to me and they don't have, investable dollars, they're just not my client. And I'm like, yeah, but, or those who are thinking, yeah, they don't have the money to buy life insurance. Yeah, but. So I'm oftentimes realizing that we have a tendency to be a bit dismissive in financial services of those who do not have discretionary income. So maybe talk a little bit about how having someone like you in the arsenal of their professional, center of influences that might be beneficial.
You just cut out, so I'd have missed most of that. Sorry.
Okay, that's okay. I noticed.
I get the gist of it, but
yeah. So what I was saying was, so you guys know we're doing these real. So what I was saying is, why should a financial service professional, when they have someone like you, because oftentimes, Darrell, when I'm talking to someone, they'll say, yeah, I don't work with clients like that. No, you don't today. What about, how could they find someone like you being useful to that so that they can get them to a point? Because besides the fact, let's talk about just address the 800-pound gorilla in the room. They don't have the money to do the investment. It's not probably going to be somebody's clientele. They don't have the money to buy an insurance policy, the things they really do need. Then that's another way to sort of dismiss that client of, oh, it's not my person. So they don't need to be their person, but how do you work with them to maybe get them to the point so they can be their person?
Yeah. So I've talked to a lot of advisors, and some companies won't take anybody that has assets under $500,000 or $250 million. So these programs wouldn't be for someone like that, because those people typically can pay off their own loans. Or their debts, or their debt is more controlled. So this program is more for people that are out of control with their debt. They have too much debt. They don't have enough assets. So what I say to those advisors is, if you find someone that is not your client now, I can save them 50% of their debt, and it frees up at least close to, sometimes it's 50%, sometimes it's more, sometimes a little less of their minimum monthly payments. So then say they have $1,000 monthly payment before the debt program. After the debt program, they have a $500 payment. So they have $500 extra dollars that they can put into savings. They can invest it. They can buy life insurance. They can do those things that they need to do. So that's why it's important to have someone like me, in their back pocket, so that client will be their client in the future, and they don't have to say, I can't help you. They can say, you need to talk to Darrell, and then talk to him, and then however long it takes you to get out of the debt, then we can talk about your investments.
One of the things that I think that I've suggested some of the advisors when we've talked about, and I've referred them to you to have that discussion, is this is almost really great for two things. One, if they have a junior planner in position, or they want to make one available so that we can recruit more people to our profession, this is a really good junior planner role where they can come in and kind of control that. And two, the one thing that I love about specifically with the work that you're doing is you're not there to take anybody's client from them. In fact, you're trying to build more clientele for them. So this is a building block part of the business. And I've even seen you like I know that you, because I've watched you do it, where you call someone and you're say they're from so-and-so's office, so that they know, in fact, that you are working with them. So you have a variety of ways that you can make your services available to different financial service professionals. Is that correct?
Yeah. So if they don't want to have someone in their office, like you mentioned, I could just do it. If, they want to, they can have a referral fee. Some people don't want a referral fee. Some people say they can't have one because it's outside business. So we can do it that way. And I just do all the work.
But this is a build. This is
in the office can actually do this, and I can teach them how, and then they can do it.
Exactly. And there's the key to it, is you can teach them how, and they can control it within their own space. So I think that that's really impressive. So one of the things I want to make certain is that you are able to reach out to Darrell to talk about debt. I always tell people, if you've got debt, you call Darrell, and they laugh, but it does tend to sink in. You are able to email Darrell at Darrell@unifiedfinancialnetwork.com. You can also call and text him 314-651-8724. And really, it does. It really does. We got him on this new iPhone. I knew he was going to say it. Don't come at me, all the Samsung people. I don't want to hear it. And but I appreciate. I know, but I appreciate you spending this time. And if you will make sure that we provide access to all of your contact on the addendum page to this. So I appreciate the time today. Thank you.
Thank you. I appreciate it.